China has issued US dollar denominated bonds to access dollars, like obtain dollar capital. And it started on November 5th, where they had a very successful $4 billion bond issuance, which was oversubscribed by about 30 times over, like a 30x bid cover. What does that mean? For $4 billion of demand, they got, on order of magnitude ballpark, $120 billion of subscription interest. That is a massive amount. Like you're looking at US Treasury debt for, every week it's originating T-bills, or every month originating a coupon bond. You might see like a 2 to 3 bid to cover. So 30x is telling you, wait, what's going on here? There's a massive demand. What this is telling me from my point of view, you think about this offshore dollar system, all of that credit-based dollars that have to find a borrower to deploy into in order to park, to earn some yield and also find safety. Tells you at 30x how much. It really reveals the state, I would say, of the demand for money. When China shows up, hey, we need money. Like borrower demand is light and the supply of dollars is high, which is what you find in that late cycle dynamic that we've talked about in the Gordon Pepper money, credit, and asset prices framework, right?
Previous episodes.
At
Yep.
this point, at this point in the cycle, the dollar supply is reaching more and more out into yield and risk in order to keep its level of interest income status quo where it's at prior. So these China bonds, right? These China dollar denominated bonds, they're custodied in Hong Kong, cleared in Hong Kong. Issuer is going to be the Chinese government. If you're in the domestic U.S. banking system, you're not buying these, right? These things cleared or the auction cleared for the 2-year bond, no spread versus the U.S. Treasury, and then for a 5-year bond, it was, I think, a 4 basis point spread. None of those from a U.S. investor standpoint, if you're a bank or an insurance company or a pension, none of that risk makes any
Why
sense.
would you add on extra
Uh,
layers of risks for the same yield, basically?
Yeah, there's no way. So where this is coming from, it's the offshore dollars that need a place to park. And China is also in a situation as a borrower. It has some demand for accessing dollar liquidity, just in riding behind that overall cyclical backdrop that we described. They did the same thing for the euro-denominated bond as well. That offering went off, I want to say, earlier. This was Tuesday of this week, 4 billion euros. That bond offering for the same functional amount, 4 billion of euros rather than dollars, that issuance was oversubscribed 25 times over. So it tells you, wow, all of that supply of offshore dollars or euros, like they're in a situation as well where they're even hungrier, or almost as hungry than the offshore dollar denominated, money supply. U.S. domestic uh, dollar system is probably much more close to a balanced market. You don't see bid to covers anywhere near that high. But this, general dynamic is what the China US dollar bond sale is really pointing to. So if you think about it in the backstop of what we just talked about with Russia and the oil majors being sanctioned, they're being cut off from the dollar system. That it's kind of like if you think about the game of musical chairs, that's chairs being pulled away. That producer, those businesses, they can't access dollar capital anymore. They've got to figure out something else to be able to functionally settle their sale of their widgets, their barrels of oil. So you got to turn to something else. And that's where you get into the second side of this story. This is July 20th. This is over the summer, but Russia has been selling precious metals to China. Their levels have reached the $1 billion mark for the year. This was late summer, so this was a story already in process. So gold was leaving from Russia to China, and then the other part of that pathway was currency was making it back, most likely Chinese yuan denominated. So you have a stream now, from Russia's standpoint, they have been sanctioned out of the dollar. They almost totally are locked out of the global dollar capital markets. Full stop. Until something changes, we reach a peace settlement. They're not going to be let back in. So in the intermediary, they have to keep funding their effort of the war, and what the financials seem to suggest. If you're putting two and two together in the headlines, Russian gold goes out, moves its way to China, shows up on the Shanghai Futures Exchange, et cetera, and all of that instrumentation that's been set up. We've talked about it, I believe, before. Um, and then yuan comes back as a payment stream, and now the Russian financial system is essentially operating itself or engaging in international trade in yuan,
On
right?
yuan rails. Yep.
Yeah, and this is where you start seeing the stories this week. Now, United 24 Media, I don't know who they are, so I don't vouch for them, but just the spirit of this headline holds. Russia starts selling off its gold reserves to fund the war budget, breaking a long-held taboo. So, like, they are actually having to use gold to pay for the war. Like, this is hard money by definition. If you go back, remember the Game of Thrones show,
Yeah.
right? There's an episode where the mercenary soldiers won't fight unless they deliver gold. This is that exact situation. Um, and then you see another headline. This is October 31st, so we're kind of jumping back and forth over the last 3 to 4 weeks here. So we piece everything together. Russia announced a plan to issue its sovereign yuan denominated bonds, right? So if you piece all this together, gold's going out, they got a yuan payment flow coming in. Now they're going to start borrowing in yuan to tap the capital source to, get the nation state the things it needs to survive, essentially. And at this point, what that means in a war is procuring goods, services, paying for soldiers' wages, all of that. So this is the state of things. The goal from the Trump administration is that this pressure on the Russian side has essentially like bottled them up, right? You can win a war by cutting off the financing, right? The day you can't pay your soldiers is the day, they lay down their arms. They'll stop fighting for you, and you, by definition, will lose. Um, Europe also doesn't have the financial capacity, just because of its own situation, to also prosecute the war effort in Ukraine. And then from the White House 47th administration policy, they've pulled back the funding aid, in large part from what the levels it was under the Biden administration, for Ukraine itself to keep prosecuting the war. So both sides, like, right now, we are in a window of opportunity for, maybe it's probably only open for 2 to 3 more weeks, where we could reasonably have a peace settlement between both sides. Like, something could take place here. It's hopeful, but it's by no means guaranteed. Things can happen from here that basically, grasp defeat from the jaws of victory. A lot of things could go wrong. There's only one way for this really to go right, and come to an agreement. But at this point, if you're looking at this from the U.S. perspective, my opinion on this matter, this administration has done everything it can do to keep this war from escalating any further than it already has, which, let's be honest, it's well past too far. Like, there's hundreds of thousands, if not millions, of lives lost, both soldiers and civilians. It's an extremely sad story. So this is a window of hope. By no means does it does it mean success is guaranteed, right? We'll get into that. Russia has every incentive not to trust Europe. Their view is Europe is coming to collateralize its own economy. Like this is a financial war at the end of the day, or it's a financial disagreement at the end of the day. And finance and money is just one kind of battlefront where wars take place. But it is the key one. So Russia doesn't trust the EU
Which has
as
already
they
said they
never
are willing to
have.
seize Russian assets to then go fund the Ukrainian side, right? So there's more than just
Yeah,
a worry. It's an actual fear that it's been put out by the
yeah.
EU.
And history said like that's just dialed up in the Russian history. This happened in World War II. This happened with Napoleon. They're always coming to invade, and Russia's always fearful and will never trust Europe on that topic. So what they need to trust, what you're asking them to do here is trust the U.S. as the man in the middle, as the escrow agent. That's the key. That's the only way this works. So we'll find out here. Hopeful, but if you want to be a pessimist, you would take a divergent view.